Hey everyone, welcome back to InsureWithRoy podcast, your go-to place for insurance clarity in under 5 minutes. Today I want to talk about something that I hear a lot when I speak to friends, clients, or even strangers. I already have life insurance through my job. Once again, I'm repeating it. I already have life insurance through my job. And while that sounds good on the surface, let me ask you something. What happens if you leave that job? And what happens if that company shuts down or you get laid off or retire? That's where you realize your workplace insurance was never really yours to begin with. Let's break it down. Work life insurance, also called as group life insurance, is often provided by your employer. It usually covers a small multiples of your salary like 1x or 2x. It's cheaper, easy, and automatic. You don't have to think about it. But here is a catch, it's not portable. Meaning, the moment you leave the job, your coverage ends, just like that. And let's be real, if you don't wait for your job situation to be stable, mortgages, children's education, family responsibilities, they stay whether you are employed or not. Now let's compare the personal life insurance. When you get your own policy, you choose the coverage amount, you choose the duration, you lock in your premium when you're young and healthy. And most important, it stays with you no matter what your job you have or even if you stop working. Some policies even build cash value that can help you later in the life. So let me discuss about the negative side of the workplace life insurance. The very first one would be the no portability. If you leave the job, you lose the coverage. Changing jobs, layoffs, or health issues could leave you uninsured at critical times. And the second one would be the limited coverage amount. For example, it often only covers 1x or 2x of your salary, which is not enough for most of the family's financial needs. Mortgage, debts, children's education and income replacement are usually underfunded in this case. And the third one would be no control. That means the employer chooses a provider, term, and the amount. You can't tailor the policy to your unique needs and goals. And the fourth one would be premiums may increase or coverage can change. If the employer switches the provider or changes the plan, your coverage might be reduced or the cost might be increased. And the fifth one would be the no cash value. For those considering permanent or whole life insurance, group term insurance has no savings or investment component in that. So when you have a workplace life insurance, I would personally suggest you to go through the policy what you have and compare that one with the expenses that you have at the moment, because just in case, for example, if you are not going to see the tomorrow's sunlight, then your family needs to have that amount to make sure that all the expenses are being covered. So here's my message today. Don't make the mistake of thinking your work insurance is a full plan. It's a bonus, not a solution, okay? Take control of your family's future today. Get your own personal policy while you still can, before health changes or rates go up. If you are not sure where to start, I'm here to help. You know where to find me. You can go on my Instagram. You can able to give me a direct message. I will be reaching out to you and I can able to tailor a plan that can help you out for your future good. So thanks for listening, and remember, life insurance is not for the person who dies, it's for the people who are alive. Okay, so let's catch up in the next podcast.